Hey everybody, welcome to another Market Mavericks edition here on this Thursday, September 18th, 2025. Yes, we have the Federal Reserve yesterday. We have a lot to unpack today. I'm joined, of course, by Scott Melker and Mike McGlone here, and we're going to delve into what went on. And I really wanted to start there as yesterday we had this big event. The Fed has finally cut 25 basis points. And, I was watching the press conference, and number one, I thought, Jerome Powell looked really tired, like he was beaten almost. He also said that the Fed has no good path, meaning that there's a risk in any direction that they take. If they don't cut rates, the economy craters. If they do cut rates, it might add to inflation. And the markets initially sold off, and then we rallied higher. And obviously, the first move's usually the wrong one, but the way he was talking, like, it didn't sound rosy to me. And I wanted to get you guys, Mike, maybe start out with telling us what you thought on that.
Yes, I think he is stuck in the middle. I think there's a lot of just excessive analysis of, okay, they cut rates. They started cutting rates. There's, I guess, dicey reasons to do that. I love how it's kind of stuck in between. And the day after he cuts rates, unemployment claims collapse. Like, oops. And right now we see bond yields going up. That's not what they want to happen. But either way, the bottom line I take from is what we discussed last time. Fed funds futures in 1 year, so 3% Fed funds. So death taxes and 3% Fed funds. I mean, this is just a guarantee that's going to happen. And what takes us to not go from there and not get there? So what's happening so far is the narrative that everybody seems to agree with, that yes, the Fed's cutting rates, stock market goes up. But I really enjoyed pointing out the facts of those of us who made some good money back in 2002 and in 2007 to 2009, just by Fed started cutting rates. And the day they started cutting rates in 2007, after that, the S&P 500 dropped 55%. The days they started cutting rates in 2001, the S&P 500 dropped 45%. So just let's be careful with those. People have to be careful with those false statistical narratives. But as far as what's happening is, I'll put it in one headline. I see it on the terminal right now, and that is, Trump threatens to axe licenses of TV stations that criticize him. So part of the reason they cut rates is because of a little bit of pressure. And every time I see that, I think of one thing, and I think the gold market just smiles. We see these kind of things. But overall, the macro is, the economy is fine. The Fed's cutting rates. The number one thing, the only thing that really matters is U.S. stock market. It's got to keep going up. And right now it's fine. Everything looks great. Is that going to last?
So gold smiles, but gold's been down the last 2 days, right? And the stock market new all-time highs today. So I guess there is a divergence there sometimes, right? I mean, it's not always gold is going to go up in this
well,
situation.
That's the day trade.
Did you lose him too,
Scott? It can easily drop back there in a day or two. Drop there, and it's up to 40% in the S&P 500. It's up 14%. The Bloomberg 20+ year index, it's a bond index, it's up 6%. That's a treasury bond index. I've been wrong on, but I think gold needs some profit taking. The stock market, well, maybe never will get some profit taking, but it's still volatility is still very low. VIX is running 15%, and now what do we do? Does this just keep marching on?
Yeah. What about you, Scott? I mean, where are you standing on this? Is that, considering the Fed now they're estimating 2 cuts the remainder of the year, which is what was priced in, but the markets just seem to want to go up and away.
I mean, I think we got exactly what we expected from him, right? Which was, we're going to get cut now. What do you call it? A risk management cut. I mean, he basically was non-committal on future cuts, even though we know what the expectation is. He admitted that inflation is ticking up while cutting, which is basically saying, hello, stagflation, and hinted to the fact that he's cutting because of the bond market. I mean, because of the job market, right? So like you said, there's no good decision for him. I agree that he looked beaten down. That said, I think we're just in one of those irrational places where people are expecting everything to go up and keep buying. I really think it's very heavily risk on, because people had built in their mind, all we need is rate cuts. All we need is rate cuts. We're going to get more rate cuts. They didn't really listen to him, and they're getting what they wanted. It's the self-fulfilling prophecy of the expectation of more liquidity.
Yeah, I agree with you. I think that it's at this point a psychological, self-fulfilling kind of prophecy where people are conditioned to buy the dip, right? So you had this 1% drop yesterday in the S&P during his speech, and then we saw this big pop into the end of the day, and then miraculously, and I was kind of drawing this conclusion, how it, I've never seen an administration more involved in the stock market. And what I mean by that is that there have been multiple jobs reports, and yesterday was a great example where you had this report, and number one, the Fed official that Trump just appointed, he was the only one to dissent and say two cuts, which should have been a 50 basis point yesterday, and then he's voting for five the rest of the way. And when you look at this, it doesn't make me think the independence of the Fed is going to be something that's going to be long lasting, because it's just a matter of time before more presidents say, oh, well, let me just put on someone who will do my bidding. And before you know it, the Fed's not independent anymore, right? And then that's an issue for the debt that we have. But even so, like you look at this morning, and then miraculously, NVIDIA invests $5 billion in a company that the US just got a stake in a month ago.
That's a coincidence,
Oh,
Garrett.
yeah. Yeah. I mean, talk to me, guys. Like what's going on here? Scott, tell me.
I don't even have a hot take on that. I would just say, as you sarcastically alluded to, it seems very fishy. You also have the TikTok deal, right? I mean,
Right.
Silver Lake and A16Z and all these guys getting a piece of TikTok coming in, and ByteDance only keeps 20%. It just seems like the government, as you said, is extremely and deeply involved right now in the M&A space, in the manipulation of the market. It's pretty crazy, but they have a lot of levers to pull to keep this thing going up, as you can see.
And I think that's what I'm gathering from this, is that there's always an announcement behind potentially something that could be negative. So, okay, so maybe the economic data is negative. Well, let's put out this PR right after the bell about this positive thing. And it's essentially helping keep the market and keep it pushing up. But Mike, you've been around long enough. How long can that last?
It's not going
I
to end
mean,
well. I find it
yeah.
very disconcerting. I think that's, like I said, like gold is figuring it out. It's the key thing I like to look at is like the macro big picture. To get through 4 years of this without, the stock market most expensive in history, without a normal 20% correction that stays down for a year or so, I think it's very unusual. Now, we've had the little 19% boom that popped up, quickest recover ever. So that's why I think what's happening in the macro. And I can show a few charts that I'm looking at if my connection is okay, because I had to shut down a few things. I'm in the London office this week, and if you can share, I want to show real quick the thing we talked about last week. So this is MicroStrategy. It dropped. To me, this is the tip, the pinnacle of risk assets. It dropped below its 200-day moving average. The 200-day moving average is rolled over. It was supposed to be a buy. If you bought it, it's bouncing. Can it hold that 200-day moving average? So this is the pinnacle of all risk assets, I think, is represented by MicroStrategy. And those of us who really jumped on and agreed with Michael Saylor back in 2020 said, yeah, exactly. The market's supposed to go up from those levels. Risk assets, obviously Bitcoin. And this is the epitome of risk off assets in deflation. It's a U.S. Treasury long bond. And this is a Treasury. This is where I started in the trading pits. It's a market I thought I knew better than anything. I never thought it'd go down this much. And it popped up against the 200-day moving average. And now it's potentially rolling over. I don't think it is. I think these are potential crocodile jaws that are going to narrow. That's a short term. Let me just show you some really big picture crocodile jaws that I'm concerned about. And this is, you just take, again, here we go, S&P 500 in terms of GDP, well, just the stock market GDP, 2.3 times, the highest ever. Okay, 100 years. And then I was able to find a Go database. I went back, 40 years to compare the treasury bonds to gold. And you got to go back to 1983, last time treasury bonds were this cheap to gold. So I look at stuff like this. I'm like, okay, where's the value here? That's why I'm still bullish gold, still bullish bonds, not bullish risk assets, most notably cryptos. I'm looking for that, and it hasn't happened yet. So what's that going to be? So I'm wondering if that's going to happen. I'm thinking the 3Q is the time for that, but obviously it's not happening in the short term.
Yeah. So, we're seeing the markets obviously continue to grind up, but I want to turn towards crypto, Scott, and get your take on this. And maybe we can see a Bitcoin chart. But basically, Bitcoin is pushing above a level. It looks like you have a level on your chart here. Could we be getting close to that next pump that takes us to new all-time highs?
Yes. I don't see why not, right? I mean, you bounced off key areas. It's reflipped the 50 MA here. It's starting to curl up. 200 MA is looking up. If it holds above, this 118-ish area, it looks like it should head up and test the highs. The altcoin market's going nuts, right? I mean, you have Solana broke 250 today. You have BNB broke $1,000 today. I mean, look at these charts. Right. This is not like just Bitcoin at the moment. There's a lot of charts that are doing this. We have huge news from the SEC on impending ETFs. There's just still a lot of tailwinds that are unique to the crypto market that I think will still continue to push. I mean, it's a nascent small market. If you get a lot of liquidity, things are going to go up. I mean, Solana had a transparent $1.5 billion buy in 2 days this weekend from Forward Industries, who just raised another $4 billion ATM to buy more. And that was all cash, no in kind. Like, that's a lot of money into Solana. It's not that much money into Bitcoin. That's a lot of money into Solana, right? So you can see exactly where the money's coming from on all of these and why it's doing so well.
Yeah. Yes. Mike, what's your take? Are you expecting Bitcoin and crypto to continue to rip? Is it tied to the stock market ripping and it's dependent on that? Or are you thinking it doesn't matter?
Oh, well, it does. I mean, that's the key thing I want to point out. I think the stock market's making record highs. Cryptos and Bitcoin should make record highs. They're completely highly correlated. What's kind of discombobulating this year is that gold's doing it too. So I think gold's a more significant indicator. And yes, it hasn't really mattered yet. Cryptos are in a tear. That's fine. That's wonderful. But I want to give you a little inside scoop I got this week. I'm back I got to see people in London I haven't seen for 20 years. And first of all, they're all wealthy. They're all good traders. So it's not just crypto people who are smart. And I just love when people in crypto say, good luck being poor. I know a lot of really wealthy people never trading cryptos. And one entity, I can't mention the name, but I really enjoyed, they were really involved in trading cryptos around 5-6 years ago. And they stopped, they got out. And this is mostly commodity people. Commodity people just buy low, sell high, and look for trends. That's all we really care about, typically, except for gold. That's the only one. And his quote to me is, we're out of the business. I'm like, why? He says, well, it went from getting definable trends that had some fundamentals behind it to nothing but massive speculation. Now, that was not me. This was some real institutional money. And they run, for instance. So this is what I'm expecting. It's great. It's wonderful. Speculation is great. But it can go poof in a heartbeat. It's not like when, Bitcoin was at 10,000, Market Strategist get bullish. Not 100,000. I just, I see gold as a better investment.
Do you see, so gold obviously continues to perform well. It's down fractionally today, but again, just a hair off all-time highs. Do you see platinum and palladium catching up? You do?
I'm glad you went there. I have to, because I'm putting it out tomorrow. About a year ago, I started comparing platinum to cocoa. I mean, the signals are just exactly the same. Major consolidation, potential fundamental shift. Platinum should go to new high. And right now it's like 1,500 an ounce, a little bit below. That's been a good resistance. It was stuck at 1,000 for 10 years. And it's the median mode for the 20 years is 1,000. It's so trend ready. It's in the deficit, according to my metals people here. It's great to meet with my metals team here. And it's got another key thing going for it. In May, it reached the cheapest versus gold ever. I mean, when you can say ever, of course, yeah, my data is only back to 1987. So it's breaking out. You don't always want to be a first buyer there, but I'm glad you pulled up that chart. To me, I see that. I see, yeah, it's bumping up against layers of resistance. But that to me is what cocoa looked like. And then it just blasted off and got parabolic. So that's what I see in platinum.
Yeah, no, I happen to agree with you. And I think palladium is kind of in the same boat in that, you essentially have this beautiful downsloping trend line and price just broke out, retraced to support, now is likely going to head up higher. And the same thing, I've kind of been, looking and saying, all right, well, I own some physical gold, so I've held that the long term and I'm doing great on it, but I don't want to buy gold up at 3,700 an ounce. I'd rather wait for a pullback to maybe 35 or 33. So where else can I go? And, a chart like this, when you compare it to how much gold has run and made new all-time highs, but palladium and platinum made highs in 2021, and they're way off those highs.
They're altcoins.
There does seem to be an opportunity there.
That's right. It's got
altcoins.
So just the little difference in palladium is I was on board that trade 10 years ago, and it got parabolic, and I was nice to take profits, but it's the lessons you learn in commodities. When something goes parabolic, gives you 10x's in a short period of time, you book it. Not all of it, and then palladium's collapsed, and it's what done that since. Now it's passing the baton back to platinum. So that's why I'm still focused on platinum. Palladium's a bit spent because it did that to a lot of people. Just, people got too long at the highs and hammered. You see that spike there.
Yeah.
But platinum's got the different. It didn't hurt that many people recently, and it's got more of a fundamental case. But like you said, you look for alternatives when there's only 4 of them though. That's why I look at gold, silver, platinum, palladium. That's why I get confuzzled with cryptocurrencies. Okay, so there's 1,000 maybe, but there's still 21 million. I mean, at least there's only 4 I can compare here.
So looking at, let's just quickly touch on oil, right? Oil and, oil and I would say copper, right? 2 very weak commodities that are kind of in the lower ends of the range. Should we take those to be economic indicators that a recession is coming?
Absolutely. Well, that's definitely with oil, but a little more political. Trump wants lower oil prices. But to me, that copper chart you see there looks very similar to crude oil in 2008. Initially got me stopped out a little bit, and then I caught it down and made some really good money after getting stopped out and reset. And that's trading. That's what you do great. And you have to do that well. So I think right now, see that, is that a bear flag? I think I love that. I love that kind of pattern, and that's the key thing. So to me, platinum is palladium. Copper is so much like Bitcoin. All the trends are up, all the indicators are up, everybody's bullish, and then at some point it might break down with good reason for it. So that's why I'm so worried that Q4 is going to see some of these dominoes fall. And copper is Dr. Copper for a reason. So I'm worried that this market going down will just take a lot of innocent victims with it.
So going back to crypto here, Scott, a couple things I've been kind of watching is different headlines about, the Trumps getting involved and being on the board or being involved with these different. Do you look at that as a healthy thing? Or is it, something that's kind of a little concerning? And I don't mean it to be a loaded question. It literally is. It could be anyone.
It's not a loaded
right?
question. It's common sense. There's 2 sides to probably everything with Trump, but certainly 2 sides to the crypto involvement of the Trump family. There's the exceptionally good side, which is that he affects regulation, policy, legislation. We get at least a mean reversion from the past administration, which was the pendulum swung entirely in the other direction. So that's great. Whether he deeply believes it, nobody can speak to that, but there are people in positions of power who are going to make sensible decisions about what crypto legislation regulation should look like, and that's because he's president. That's great. The flip side is you get meme coins 2 days before he's inaugurated into office, which is obviously patently absurd. And you get a family that understands, and maybe it's because of a deep belief by some of them, that they can make a hell of a lot of money in this industry that they're also pushing for legislation and regulation. And that doesn't even have to be cynical. Like, they're a business family and they're in the business of making money, and there's a hell of a lot of it to be made right now. But I mean, they have more money in crypto than they do in real estate. So of course,
it's incredible.
This is going to be a bit. Listen, if the midterms go the wrong way for the administration, let's say the Senate turns blue, right? It's possible. You very rarely see an incumbent party win both houses in the midterms, right? So you have Elizabeth Warren as the head of the Senate Finance Committee again, literally. If the Senate goes blue, and what do you think all of this will be to her if she gets in a position of power, right? So I would say that it's a good and a bad, and it really depends on how long the music keeps playing for the Republicans holding the entire government.
So by that logic, then, actually, if you are an investor versus a hodler, right? Hodlers are going to hold forever. They're not going to care. But if you're an investor, you may decide it might be smart to take profits in some of crypto, let's say 3 or 4 months before the midterms, just because of that risk. Because I could see if that did happen and that swung back, then you could be looking at 50% drops in certain cryptocurrencies, like the
85, 90, 95. Another true bear market for most altcoins. I'm not saying Bitcoin will do that, but most altcoins will fully have brutal bear markets.
In terms of history, it's much less of an if. it's the wonderful check and balance of the U.S. system. I mean, that's the key thing about, we got rid of Biden and we got a president who's very crypto friendly. Okay, great. I mean, the populists did that, done with it. And at some point it's going to get pissed off and sick of this guy or his policies and tilt the other way. This self-correcting mechanism in our country is awesome. And the midterms almost always flip back. So it's very likely, depends. Now, right now everything's fine. But we start getting a little more, people are not really appreciating these type of comments that, if you criticize him, you get pressured. That's not the American way. It's just, sorry, that's what made us great. But, well, it's just, I'm sensing that, yeah, everything's great right now, equity, stock market, unemployment. But there's a lot of wood to chop before we get to those midterms.
Yeah, no, I agree with that. Definitely. Turning back to the inflation bug, right? So, CPI last week came in a little bit hotter than expected or kind of in line. Jerome Powell basically said he didn't say the word stagflation because I think he's smart enough not to say that bad word. But we're essentially in a stagflationary situation. Mike, you're still deflation eventually takes over when the economy weakens. Scott, how's your view on the inflation stuff? I mean, do you see these tariffs having a longer impact to inflation, a short-term impact, or just unknown?
I always thought the tariffs would cause some inflation. I don't even remember last time anyone talked about tariffs. It's like they don't exist anymore because we have the memory of goldfish and have moved on. But I don't even think tariffs are the discussion. Like, inflation is sticky and rising, and they're cutting rates, so inflation should go up.
Right. And the stock market's at all-time highs and keeps going, which is the wealth effect, which is inflationary as well.
So, yeah, I mean, tariffs or otherwise, listen, like the Atlanta Fed, what did they say? 3.6% they think GDP will grow. So there is some serious growth, but I do think that they're going to let inflation now. Let's just say that 2% is no longer the target based on yesterday's actions, no matter what he said.
So I got to address that. I'm going to show you one chart. The tariffs on a scale of 1 to 10 are probably a 2 compared to this. And this is the number one thing that matters for inflation. Scott just touched on it. This is the U.S. stock market cap to GDP. I just take the S&P 500 divided by GDP. It's pretty close. 2.2. It's actually 2.3. We're the highest in the 100 years. That's a significant wealth effect, inflationary force. And when that goes down, I didn't say if. Now, the thing is, it can continue higher forever, right? When that goes down, that's normal deflation from the inflation. This is what I'm worried about. I just take the same thing, S&P 500 in terms of gold. It's turning down. And this is the same level as at first. It's flatline versus gold since 1997. So imagine that. We've gone through the whole internet bubble. We've gone through this whole AI bubble. And if you're a holder of gold and a holder of S&P 500 and getting this is a total return, by the way. This is why I show you. A long term, I want to show you. Long term, stocks always beat the rock long term. But now we're pushing 28 years or so where they're not doing it. This is what I'm worried about, and throwing over. And here's Bitcoin. This is why I'm saying when it does have a correction, it can easily go back to 10,000 and mean nothing. Bitcoin was part of this massive America Great rally. And that's what I'm worried about, sparks that might kick that lower. And so far, the only thing so far is really gold. But if inflation's a problem, then that 10-year note yield that bumped kind of bottom around 4%, the high for the year is around 4.70 or so, it should go up. And that's the number one thing that matters for 10-year note yields. And it's not. And partly because we're seeing pretty significant deflation in the rest of the world, and most notably China.
So just out of curiosity, we saw a correction of about 20% earlier this year. And Scott, you could maybe correct me on this, but I think Bitcoin was around 100,000, maybe a little over 100,000, fell back to what, 79 or something like
74?
That?
Yeah, 74, 7.
So it was about 25% drop. So if we were to go to 10,000 on Bitcoin, I mean, is the market down 70, 80% at that point, the stock market? Or do you think it would decouple in that way?
Bitcoin's not going to $10,000. I don't know.
So
I can't. I know that Mike deeply believes in it.
Yes.
I mean, if Bitcoin was $10,000, then I don't even know where I'm getting my drinking water.
So that's That's a very profound statement, because I made the same call in 2018 and I got 70% of the call. I said it loses zero and went from 10,000 to 3,000. But that's the key point now. It's so inconceivable for that. So I am making the call. I've been to her, that we're overdue for another 50% drawdown in the S&P 500. And I need to show you how that stuff happens. This is just a chart of gold divided by S&P 500 ounces of gold. When the Fed started easing in 2001, you wanted to be short the S&P 500, long gold. It just collapsed. Again, same thing. Fed started easing September 2007. Same thing. You wanted to be short the S&P 500, long gold. Even when we started easing here a little bit in 2019, now we're starting to ease and it's just starting to roll over. Hopefully it's different this time. Hopefully McGlone's wrong. I just pointed out gold seems to be maybe we'll get through the rest of the year fine. That's why I'm worried about this next 3 months will just be pretty significant. Let's put it this way: we cannot.
That's so far. That would just be like 10,000. It's like a bigger drawdown than the most volatile early days with Mount Gox. It would be so bad.
Well, I think
So
the idea
bad.
would have to be a worse situation than 08, 09, right? I mean, for essentially you're talking about
It would have to be a
potentially
double. It would have to be worse than 1930. And that it could be. I'm just saying,
And
but
you're
that's
right.
the
Then if it's
situation you would
worse than
have to have
1930,
for Bitcoin
you're wondering
10,000.
where
You
you're
would have
getting
to
your
be,
drinking water from.
yeah, you would have to be in a deep, deep Great Depression for Bitcoin.
Let me show you something here that I found interesting. So here's a chart of 2007. Well, basically 2006. The housing market topped. Housing prices topped here. This was in basically late 2005, 2006, early 2006. The first Fed cut came September 18th, 07. The market went a little bit higher afterwards. If I zoom in, we could see, this is a weekly chart. So there were 2 weeks of upside, and then the markets obviously saw the financial crisis. If you look at the recent data, housing prices topped out in 2023, about 2.5 years ago. All right. Now, granted, in different areas, it might have been a little different, but certainly in the South, in Florida, prices have already started tumbling. And the Fed on September 17th, one day prior of the month, made their first big cut here for this cycle. Just pointing it out, interesting that the labor market hadn't swung into a negative yet back here when the markets were at this point where the Fed cut. We were still kind of seeing jobs numbers, which were lower and weaker, but we hadn't gone negative yet. Same thing right now. And so, again, it doesn't necessarily mean the same thing occurs over and over again, but it's just interesting to watch as the same sort of things kind of happen again, right? I mean, you see margin rates at all-time highs. Credit card delinquencies are now above the 08, 09 levels. Now, granted, you have a bifurcated economy, right? You have people that don't have investments that are absolutely struggling and they've been in a recession for a couple years. And then you have other people that have lots of investments and they're living like they're kings, right? I mean, their money just keeps exploding to the upside. But again, a lot of similarities with 08, 09, just before 08, 09. Thoughts?
I agree with that. Yeah.
There you go. Exactly. That's why I'm expecting a lot of cryptos to drop to zero. I've been wrong. I'm just waiting for that catalyst. And the key difference with that peak you show there, certainly 2007, is market cap to GDP was like 1 and change, 0.2 or so. Also, a big difference. You see this. I love when people say there's high cash levels. They were very much higher. Now, the typical money market account they show like it's worth about, these money market measures, around $7 trillion. The stock market cap is 70 trillion. So it's about 10%. In 2007, right before the great financial crisis, that level was closer to 14 to 15%. So cash levels are very low. You have to put in context of how expensive the market is. I'm afraid of just it's something that might pop that bubble, and that leading in educating for everything. That's why I started is cryptos, and what's the hottest one out there is MicroStrategy.
MicroStrategy. All right, guys. Well, it's 3:30. Let's call it a day today. Really interesting, again, coming off the Federal Reserve first cut of rates here in this next cycle period. We'll get the jobs data in a couple weeks. I think next week we get PCE data, so we'll be discussing that in next Market Mavericks. But as always, gentlemen, thank you guys. It's always an enlightening and fun discussion with you guys. And again, folks, follow these gentlemen below at their handles there on X. And we will be back next Thursday. You guys have a great one. Talk to you later. Take care, guys.